Welcome to today's market report. European stock markets traded lower on Friday with investors weighing increased COVID-related restrictions with the announcement of additional US stimulus. The DAX in Germany traded 0.4% lower, CAC 40 fell 0.7%, FTSE 100 dropped 0.7%. The coronavirus continues to hit European economies hard. The UK reported earlier Friday that its GDP fell 2.6% in November, back to 8.5% below the levels seen in February 2020, with the service sector acting as the main drag on growth. France announced Thursday it will bring forward its night curfew by 2 hours for at least a fortnight, while Germany's government is weighing up tougher lockdown restrictions as countries throughout the continent try to slow the spread of the virus. Italy, the Eurozone's third biggest economy, is not only suffering from a resurgent coronavirus outbreak, but also a deepening political crisis after former Prime Minister Matteo Renzi pulled his Italian AVEVA party out of the ruling coalition government, denying it a majority in parliament. These woes have overshadowed US President-elect Joe Biden's overnight proposal of a $1.9 trillion stimulus plan to support the world's largest economy. The bill had been widely expected, especially after the Democrats won control of the Senate in early January, as well as holding the House of Representatives. In corporate news, SAP stock rose 1.9% after the software company reported a hefty rise in operating cash flow and raised its forecasts. Remaining in software, AVEVA stock saw 4.4% after the UK company also reported a 26% rise in currency-adjusted revenue in the fourth quarter. British American tobacco stock rose 0.1% after UK Serious Fraud Office closed a 3-year investigation into suspected bribery, but oilfield services provider Petrofac was less fortunate, falling 18% after admitting that an SFO investigation had resulted in a former employee admitting additional charges against him. Current employees of the group are alleged to have acted in concert with the person in question, but have not yet been charged. In France, Carrefour stocks slumped 4.8% after the French government voiced its strong opposition to its being potentially taken over by Canada's Alimentation Couche-Tard. Oil prices weakened on Friday amid concerns about a resurgence of COVID-19 cases in China, the world's largest crude importer, with the country reporting the highest number of daily cases in more than 10 months on Friday. This has prompted the lockdown of more than 28 million people this week, potentially hitting demand. Crude futures traded 0.8% lower at $53.13 per barrel. Brent fell 1.2% to $55.47 per barrel. Gold futures rose 0.1% to $1,852.15 per ounce. On the FX front, the GBP-USD pair touched above 137 before retreating, somewhat baffling its supported sterling despite the negative due to the Brexit and the pandemic situation. FX analysts expect the cable to trade between 136 and 137.20. The US dollar selling after Powell's speech saw the GBP-USD lift to 137.12 high, but again failed to hold gains. The market seemed intent to bid up the GBP, which lagged the EUR amid the Brexit negotiations. Nevertheless, domestic concerns remain daunting at this stage. GBP-EUR was testing the 23rd of November high of 112.78 yesterday, remaining at 112.42 at the moment. The UK Finance Minister Rishi Sunak commented after the GDP figure came out this morning, saying the figures highlight the scale of the challenge we face. It is clear things will get harder before they get better. There are reasons to be hopeful. Vaccine rollout is underway. We will get through this. We are creating new opportunities for those most in need. The cable pair has fizzled the bounce led by the upbeat GDP figure, now trading at 136.32, losing 0.18% so far. Euro-dollar remains weak and drops to lows near 121.20. The pair lost ground for the third consecutive session at the end of the week and always on the back of the moderate improvement surrounding the dollar. The dollar edged high on Friday, but gains are likely to be limited after Jerome Powell declined to join any discussion about reducing monetary stimulus. The dollar index was up 0.1% at 90.267, rebounding from last week's near 3-year low. This is today's market news. Thanks for listening. We'll see you next time.